Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin is trading near $66,300, while Ethereum sits at around $2,025, with both assets clinging to critical support levels as institutional capital retreats and macroeconomic pressures mount. The Iran conflict entered its fifth week, driving Brent crude above $112 per barrel and raising serious questions about inflation and rate policy. Institutional flows reversed sharply last week. Bitcoin exchange-traded funds saw nearly $300 million in net outflows, breaking a 4-week inflow streak. Ethereum funds hemorrhaged $222 million, the worst performance among all crypto products. Stablecoin liquidity is declining too, with Tether's market cap stalled around $184 billion and Circle's USDC down 1.5%. On-chain data paints a concerning picture. Nearly 47% of all circulating Bitcoin is now underwater, with long-term holders selling at losses not seen since 2023. The Bitcoin Impact Index flashed high-impact stress levels, historically a precursor to double-digit drops. Analyst Peter Brandt warns that Bitcoin's price action suggests potential downside to $49,000 unless support above $66,900 holds. But there's significant positive news on the regulatory and adoption fronts. The US Labor Department proposed a historic rule that would open trillions in 401k retirement savings to cryptocurrencies. With Americans holding over $10 trillion in 401k accounts, even a 1% allocation could funnel billions into digital assets. Meanwhile, Square automatically enabled Bitcoin payments for millions of eligible US businesses in a major mainstream adoption push. The rollout requires zero setup, converts Bitcoin to dollars instantly at checkout, and charges zero processing fees through 2026. On the technology front, Google's quantum AI team warned that quantum computers may break Bitcoin's cryptography sooner than expected, potentially requiring fewer than 500,000 physical qubits instead of millions. The research estimates roughly 6.9 million Bitcoin already sit in wallets with exposed public keys, making them vulnerable. The crypto industry is flexing political muscle ahead of the midterms. A new blockchain leadership fund launched with backing from Chainlink Labs and Anchorage Digital, joining the dominant Fairshake Super PAC that raised nearly $300 million in the last cycle. Senator Elizabeth Warren led over 40 Democrats urging regulators to warn federal employees that insider trading on prediction markets is illegal, following suspicious activity on platforms like Polymarket. Separately, Maryland authorities charged a man with carrying out the $50 million uranium finance hack in 2021, recovering approximately $31 million in crypto. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.